What's going on, everybody? Welcome to another market update live stream. We're going to be covering September Guelph Real Estate Market as well as midway through the October real estate market here in Guelph. I just crunched all the numbers and we're ready to dive in, so let's go ahead and do it. Before we do, this is obviously brought to you by the Zahnd team, the only real estate company that guarantees you a 5-star real estate experience. If you have any questions about that, please feel free to give us a call, check out our website, or just call the number on the video down below. All right, so let's get, while you're here, the market update. Okay, so let's take a look at how we wanted to start this with it, which is what's on the market currently. So here is the 5-year average. I changed things up a little bit. Please feel free to comment below if you like the old way or the new way. I'm trying to improve the information delivery to you so it becomes more easier to digest, I guess. Let me just turn down this mic. It's a little hot. All right, hopefully that's better. All right, so here we go. We got a 5-year average here of 254 units are usually on the market at this time of the year. And right now we're stuck at 99 units of inventory. So how does that product mix break down? Well, in Guelph right now, here is our 5-year averages for singles. We have usually 156 singles on the market at this time, around 13 semis, 44 towns, and 47 condos. And right now we're stuck at 65 singles, only two semis, 18 towns, and 14 condos. So as you can see, inventory levels are super suppressed. We don't have enough inventory on the market, as you can tell. So actually, if you want to, I'll have it linked up here above. If you want to go check out the last video I did, I went into a crazy deep dive about what's happened in the market in terms of why we don't have any inventory and how it's not just a demand issue, and at the end of the day, it's just a huge supply issue. So definitely go check that video out if you're interested in a deep dive about why we're losing inventory. All right, so let's take actually, now that we're on the subject of inventory, let's take a look at the inventory vitals. And as you can see here, like just to quickly touch on it again, in 2019, we lost 41 units of inventory. In 2020, we lost 95, just a huge amount of outflow versus inflow at the end of the year there to wipe away our inventory. And obviously that put us at a disadvantage in 2021. However, it's a little spoiler alert here, we have already added 52 units of inventory to the market this year, which it doesn't seem like it because it feels like we're always out of inventory, but surprisingly, I'm even shocked with this as well. We've actually added 52 units of inventory to the market this year, which I would have felt it was a reverse based on how the market's reacting. But I guess, once you bled all your inventory out and the demand stays the same, it's going to be tough to rebuild that inventory. So hopefully, this is going to be a sign of rebuilding inventory, and we're going to keep going. The one thing that we have to watch out for, though, in the coming months to see, in the past years, we had massive outflow at the end of the year and limited inflow. And you can kind of see that here as well, massive outflow and limited inflow at the tail end of the year. So here we are right now in the tail end of the year in 2021. So let's take a look. Hopefully that inflow will maintain itself and not give way to our outflow. But I don't think it's even possible to really go much lower than we already are. If our inflow drops significantly, it just means there's going to be less outflow, obviously, because there's nothing to consume. So hopefully at the end of this year, we'll have a little extra inventory to kick off 2022. All right, let's move on. So here, I just want to break down what the inflow and outflow numbers look like for you. I'm going to zoom in for you. This might be tough to see, so let me get a big zoom in here. And we'll cover the numbers first, and I'll show you the graph. So I wanted to show you what happened in September and what's going on midway in October. These first numbers are to do with the whole year, so obviously they're not broken down into months. So just the inventory inflow rate in 2021, how many homes per day come to the market every single day? That's what this number is. And in 2021, we've seen 9.5 homes come to the market every single day. That's actually up almost 16% versus the 5-year average, which is sitting around 8.3 homes to the market every single day. So that's a good thing, right? We're getting inflow coming in. The not so good thing in here is the current month inventory rate in September. So in September, the inflow rate was only 7.3, which was almost 25 to 26% less than we usually get on our 5-year average. So as you can see here in the graph, I'll zoom out a little bit for you. In September, we really did not get that inventory inflow spike that we usually do in the fall months. As you can see here in September and October, the 5-year averages are quite significantly higher than where we are right now. And actually, we haven't been hitting even close to our 5-year average inflow rate at all. This is going to kind of lead me to one of the other assumptions that we're making here, is that we were expecting at the beginning of this year to have a record year, 3,000 plus sales of homes in 2021. Obviously, we had a huge spike of inflow here. However, since then, the inflow has just disappeared. No one's bringing their homes to market, which is obviously going to reduce the amount of home sales. So it doesn't even look like we're even going to break any records. We actually might be lower this year than typical years, which is quite surprising. And again, I know I'm jumping around here a little bit, but I'm going to hit on the hot topics that we've been talking about, with the recent election that just happened. There was promises made to bring more homes to the marketplace. And if we're only going to rely on actual people like me and you bringing our homes to market to sell, we're always going to be in a supply crunch. We need to build more homes. The only way that we're going to solve the affordability crisis that's happening right now is by bringing more supply to the market via building more homes. Relying on everyday people to bring their houses to market isn't going to be enough to meet the demand of current market conditions, and it's also not going to be enough in terms of bringing enough supply to the marketplace, right? So if we want to solve the affordability problem, it's either do one of two things. Make it harder for people to buy homes, so increase interest rates, increase qualification rates, limit foreign buyers the ability to buy homes, or build more homes. So you either gotta not interfere with the marketplace to cool it off, so more people can bring more inventory to the marketplace, or the other option is to actually build more homes. Because if the government wants to continue using real estate as a massive economic driver, you're going to have to bring in more supply to the marketplace, because obviously all the inventory is getting consumed. Side note here, there was a super interesting article. I'll make sure we link it in the description below. But what's going on in China right now with the Evergrande crisis is a developer going bankrupt, billions and billions of dollars in debt. And then it's also talking about how in China they actually control the supply, and there's actually ghost towns, empty cities, whole cities that are completely empty because they overbuild. So that's obviously not what we want in our scenario, but they're on the extreme side of building supply, where we're on the other side of not building enough homes. All right, so I know I went on a little tangent there. It's because this has definitely been an ongoing issue, affordability and supply, and essentially there's only really a couple ways to solve it, right? Increase the qualification rates, interest rates, make it harder to essentially buy, or create more supply for the bring more supply to the marketplace, and that's what's going to help us get through this. Anyways, so yeah, that's the inflow information right there. So again, we're seeing less inventory come to the market. So let's see what's happening on the sales side here. So on the sales side, actually in September, this is the scary part, right? We didn't meet inflow expectations, but we did meet outflow expectations in September. We actually just peaked a little bit over our 5-year average. And in October, obviously, sales are not nearly as high as they were in September as of right now. We're only 15 days in. But, it's about halfway there. So I think it could get there. But if there's not enough inventory coming to the market again, then obviously, if only 10 more units come to the market, we're not going to be able to get to the sales levels that we're supposed to be at here. So just looking at the outflow rate for the year. So currently in 2021, we're seeing an average of 7.8 homes sell every single day in Guelph. And our current so that's what's currently happening. Our 5-year average is 6. So actually we are seeing a 23% increase in the amount of sales that are happening. Again, though, when we look at the current months that are happening, which is where we're gonna either have to make or break the year here. In September, we saw 6.4 homes sell every single day, and in our 5-year average was actually 6.3, so we're at 1.7% increase. This should actually be green. I'm not sure why it's red. So when I did this market report last time, this was actually significantly lower. I think we only had about 5.5 homes per day selling. So at the end of the month, the last 15 days of the month, we saw a huge spike of sales coming up. That's how we were able to meet that 5-year average. However, this month right now in October, we're only currently selling 5.6 homes a day, which is almost 15% lower than our 5-year average. So again, less sales hitting the marketplace. This is our failed sale. Obviously, if it's a negative number, it's green, because if we're failing to sell less, it's actually a decrease, which is actually a positive. Decrease in failed sales is actually a positive, not negative here. So failed sales, homes failing to sell, is down 23% this year, and this month it's down 80%. So homes that are failing to sell are down 80% compared to our 5-year average. It just goes to show, right? Not a lot of supply on the marketplace, not a lot of inflow coming in. Outflow is staying relatively the same, close to the 5-year average. So there's not really a lot of opportunities for homes just to sit on the market and fail to sell, unless they're extremely overvalued, or I'm not really sure why they'd be failing to sell, but probably price is way too high, or it's got major issues in terms of sorry, I'm losing my words here. It's in a state of repair, right? It's almost falling down, for example. That's probably why they're not selling. It's the only reason. So 80% of homes right now so homes are not failing to sell. As you can see here, we typically see about 2.6 homes fail to sell per day in Guelph during this typical month, and right now we're only sitting at 0.5 homes failing to sell. Only 8 homes failed to sell so far this month. So that's how it's stacking up. So what is the overall impact? Well, the overall impact here is, I showed this to you a little bit before. You can see here these gray lines right here that I'm pointing at. These are essentially what our current inventory levels are in every single month. And as you can see, every single month it just keeps going lower and lower and lower and lower. And the dark gray lines are actually the 5-year average inventory levels. So as you can see, we've just been completely suppressed on our inventory levels all year long, and that's definitely is the main contributing factor to our inflation in our sales price. That's, no inventory, demand, going to increase price. Lots of inventory, lots of inflow coming in, low outflow, an accumulation of lots of inventory, you're going to suppress prices. Inventory is going to solve a lot of price problems, essentially. So as you can see here, we started to drop in our levels here. Total in so far, it's 2743. So in 2021 so far, we brought 2,700 homes to the market. 2,251 homes have been sold out of the market. 440 homes this year have failed to sell, which leaves us a total net of 52 homes net to the marketplace this year. So it's quite a bit different than the last couple of years. Hopefully, again, this maintains. So what has this all done to the? Let's actually. I'll show you this in 1 second here. 30-day forecast. Okay, yeah. So let's forecast what's going to happen. This is always fun. I got some predictions here. As you can see, my September prediction was pretty close. I predicted that we'd have 112 units at the end of the month. And we had it about 95 here. In October, I'm predicting we're going to end around 127. We're currently at 99. In November, I'm predicting we're going to have about 142. Show you how I got there. So right now, today's inventory is 99 homes on the market. Our 15-day inflow rate is 7.1 homes per day. That means we should see in the next 30 days 212 homes come to the market. So that should give us 311 units to consume. So I'll kind of tell you how I got there. So the 99 homes that are currently on the market, plus the 212 homes that are going to come to the market, that's going to give us 311 homes for buyers to buy, right? On the outflow rate, we're seeing about 5.6 homes sell per day, which is about 168 homes. And we're only seeing about 0.5 homes fail to sell per day, which is only going to be 15 homes that are going to fail to sell this month. If all this holds true, the total outflow would be 183. And again, if the inflow holds true and the outflow holds true here, we should see about essentially 311 minus the 183 gives us the 128 homes. That's how I kind of got to the inventory levels. That's where I'm predicting inventory will be around November 15th, 2021. So when I do the market update in a little bit, we'll see if we're on or off on that. So absorption rate is a way to analyze how well the market is doing. Is it a seller's market, is it a buyer's market, or a neutral market? Usually at between 3 is a balanced market, 3 months of inventory is a balanced market, 6 months is a buyer's market, less than 0 to 3 months is a seller's market essentially. Right now we only have 0.69 months of inventory on the market, so this essentially says if no new homes, so once we get to November 15th and we have 128 homes left on the market, if no new homes come to the market at all anymore and we continued our existing consumption, we would be out of homes in less than a month, in about 3/4 of a month. All right, hopefully you're finding this info helpful. Drop a comment below. Maybe I'm missing something that you want me to talk about. I'm happy to take your comments and see if I can elaborate on anything I'm missing here. Hit a DM and I'll send you a personal message, and we'll get chatting about this. All right, so what kind of impact has this had on average sale price, days on market? Let's take a look. All right, where am I at? Okay, so sold listings, average days on market. So here we are. In January we're at 10 days. In January of this year, homes were staying on the market approximately 10 days. Then we got really hot. It dipped down to 8, 9, started creeping back up, 10, June was 11, July 13, the summer months, right? We cooled down a bit in the summer months, 13, August was 13 days, and now it's getting a little bit hotter again. As you can see, September is sitting at 12 days. Sorry, you're not seeing that because my face is in the way. So currently in September, we are 12 days on average on the market, versus our 23 days on market we typically are over our 5-year average. So you can see we're the homes are not lasting long, and obviously that's again due to the inventory issue. Sold price, list price to sale price ratio. So how much over asking our houses selling for? Funny enough, in September, our 5-year average in September is 100%. So that means if you were asking $100,000 for your property in September, based on our 5-year average, you were getting exactly $100,000. You were getting what you were asking for. Right now, in September of 2021, our list price to sale price ratio is 109%. So if you have a $100,000 property, you'd be getting offers at 109. So why is this important? Well, for you as a seller, it gives you an indicator of how you can push price. As a buyer, it gives you an indicator of what you might need to do in a competing offer situation, right? So for example, if there was a really hot home on the market and it was asking, let's say for easy math, it was asking $100,000, the last thing you'd want to do if you know it was a properly priced home is offer $100,000. You need to at least offer 9% more on that home, if not maybe 10 or 11% to be more competitive against the other offers in the buying scenario. So that's how you can kind of use list price to sale price ratio. As you can see here, we started the year at 112%. We dipped all the way back down in May to 101%. And then we dip back up here to September, low inventory again, to 109%. Here's a good one. So again, I'd like to show the average sale price in a couple of different ways. So in January of this year, our average sale price in January is $709,000, which was 11% up over December 2020, and 35% up over January 2021. You can't even see the graph here, but as you can see, January 2021 is way down there. January 2020 is way down here. January 2021 is way up here. So a huge start to the year in terms of average sale price. And as you can see, the gap has remained pretty wide, but it's actually starting to close off a little bit, which means that the average list price to sale price, the average sale price is decelerating versus 2021, where it was actually picking up steam at the end of the year here. As you can see, this gap is much smaller year over year than, for say, this gap right here, right? So that's pretty interesting. So right now, where are we sitting? Well, in October, there's only 15 days worth of data here. That's why we're going to go flip to the next screen. $872,000 average sale price. Again, this is the very first time we've ever broken 800,000 at all. As you can see here, 709, 735, 780, 727, 740, and now just 872,000. Massive jump month over month, but again, the sample size is so small, it's only 15 days. And that's why I really like to actually look at this chart much more than I like looking at the previous chart. This chart here shows an accumulation of the years. So essentially, as you can see here, the red line is sales accumulating, right? So January, we sold, let's say, 141 units. February, 251, 362. Right, that's a lot of units sold in 1 month. 362 there, 295, and so on and so forth. Right, in September, we sold 191, for example. So here we go. So that's the accumulation of homes selling, right? So as the more homes sell, we can have a bigger data set to analyze. And if we look at October right now, we have 2,251 homes sold. So we could see that the average sale price is likely going to be a little bit more accurate based on just looking at it from a month-to-month basis. So in October right now versus the $872,000 I just showed you in the previous screen, in October, with the new sales that have come in October, we're sitting at a $754,000 average sale price, which is up $5,000 from the previous month, right? As you can see here, we started at 709 back in January, and we had a massive spike in February and March, then really started leveling out here in April, May, June. Actually dipped down. You can see that there's actually a dip in the cumulative sale price, average sale price, down to 746. It stayed again the same in July, 746. Picked up a little steam to 747, 749, and now 754. So you can see that we really lagged there. The summer months kind of lagged off in average sale price, and now it's picking back steam again. The 2021 days on market average, the hottest time of the year was February and March, and as you can see here, it's been pretty much 10 days on average for the rest of the year, which is still really hot. And our average list price to sale price ratio, as you can see here, it was way hotter at the beginning of the year, 111, 110%, and now we're settling in around 107% list price to sale price ratio. All right, great. Well, that's all I really have for you here. I hope that you found this information useful. I went into a really big deep dive in the inventory in the last video. So if you have any questions about the market in Guelph, obviously we can do an in-depth analysis for you like this for any market that you're interested in. We do serve, Guelph, Kitchener-Waterloo, Cambridge, Fergus, Elora. We do have market data on all those, but these market updates are specifically just for the city of Guelph. So I hope you liked it. I hope you appreciated it. And if you have any questions, feel free to hit us up. All right, I'll talk to you soon. Bye.